It is Wednesday, 10/25/2017. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And unfortunately, we did not get our asses kicked at jiu-jitsu today. I had a minor schedule rearrangement, and it didn't quite go out the way that I intended it to do. But, hey, these things never happen the way we intend for them to. But I will say this. I did do jiu-jitsu yesterday, and it was probably the first time in a while now that after the fundamentals class on Tuesday that I felt that I still had enough that I could probably get through the advanced jiu-jitsu class. Unfortunately, I did not stay for that, but I'm planning on doing so tomorrow, actually, is to show up there, warm up with the fundamentals, get nice and relaxed and into it, and then boot it up to the advanced class. As I had indicated in the Telegram room, I am working on a couple of interviews coming in here. And actually, I didn't indicate that in an open one. I'm working on getting a couple people in here. On Friday, to the last of my knowledge, this was still on. I haven't spoken to him yet since... I can't remember the last time I spoke to him about it, but it will be soon again. I'll hit him up and see exactly what's going on with it. I'm not going to go too much into it right now, but Mr. Vinny Lingham is supposedly going to be joining us on Friday, and we'll get an opportunity to get an idea of what he's been up to. As far, I think he was the CEO of Civic or something to that business. I don't know. I haven't had an opportunity to dive too deeply into the man Vinny Lingham, but we will have more than an ample opportunity on Friday. So that is, of course, assuming he does come on. I'm assuming from the message trail thus far that is a high likelihood. So you may want to mark it on your calendar. I probably should be putting it all over my social media. I just have not. Honestly, it's like I've been really busy, and I would like bother to hire staff and stuff. But the thing is that this period isn't going to last for very long. It's like pretty soon everything evens out schedule wise, and it's like my demands to be in 8 different places at once cuts down to like maybe 3 or 4, and so it gives me a little more time to plan things out, think about things, But so like I said, we're planning on getting some people on and having some interesting discussion. And I know Vinny is kind of well known, but the other gentleman that I plan to be having on soon is fairly well known in the cryptosphere. He's an old dog, has been around a long time with regard to Bitcoin, and he's had an opportunity to see it almost maybe as long as I have, maybe a little bit longer actually. However few people that actually applies to. But so I'm keenly interested in having him on here and getting an idea for getting into his mind, finding out exactly how he perceives the proposed changes to Bitcoin and all that squabble business and a few other things. It seems like he's got a little bit on his plate that he would like to talk about. I told him we don't do anything pre-planned here, but if he's got something he wants to talk about, he needs to let me know. Because, I don't mind giving exposure to people for their projects. I really don't. I think that, it's as risky for them as it is for me. If it comes back that their project was scammy or whatever, that doesn't reflect very well on me, especially if I'm saying things like, oh, you should buy this. That's why I don't say stupid shit like that. But at the same time, it's like guilt by association kind of thing. It's like, oh, you're blowing these guys up, and they really... You know what? We don't know if anything's a scam until they've done the scam. Okay, we can point our fingers at it, and we can look over our shoulder at it like it's something suspicious or whatnot. But you know what? Until the scammer is actually on an unknown island in the Bahamas chain and is absconding with the ICO funds and leaving everybody with nothing. Until that time happens, we really can't tell whether or not something is a scam. And even with Tezos, as scammy as that whole situation has been, honestly, I think if you take away all the face crap, basically like when they signed up for the VC money that they got from certain people, they basically sold the company at that point, and this was just like the public jerk off. Just, oh, hey, these guys are still good. They didn't intend to just, pull all of you in and then fucking bail and sell it to Goldman Sachs or whoever the fuck it was that bought them. That wasn't the plan. Come on, people. How long do you have to be involved in technology and watching these same fucking storylines play out all day long before you get the impression that, that there really is a grouping out there of people that are interested in consolidating all of this power back into a few hands? And I think that's an assumption that a lot of people need to start adopting, because you're working with technologies that could just as well enable a future monetary monopoly no better than the one we had, and probably much worse. So, it's like, what kind of world are you really setting out to build with your project? What exactly is the value that you're trying to give to your customers, or the people that you intend to use it? I don't know. I'm not going to go there. So it's a whole set of problems, and I think that one of the biggest problems in crypto is that there are so many people out there that are looking at Bitcoin and wanting it to solve their problem, not trying to figure out how they can solve their problem using Bitcoin. They're trying to make Bitcoin solve their problem for them. And I think that's a really poor way to look at Bitcoin. I mean, in all honesty, it was always meant to be a peer-to-peer cash system. Now, sure, the Bitcoin and blockchain and the immutable record and all that it gives all kinds of potential to do all kinds of shit. We know this. But the question that you need to be asking yourself is, should I be demanding that Bitcoin change in order to facilitate my needs? Or should I be trying to be more efficient and get ahead of what Bitcoin can do in an application to my projects? I mean, because it's like they say, oh, Satoshi Nakamoto did this, so I don't need to do anything. Do you think the rest of the world is looking at Bitcoin and cryptocurrencies like that? I can tell you right now that they're not. They're looking at their projects saying, okay, this is our goal, this is what we want to do, how do we do it better tomorrow? And they start working on that. As soon as they hit that goal, and maybe even before they finish that goal, when it looks like that goal may be completely planned out and is just falling into place, they're already planning on what their next goal should be. This is what makes the difference between a cryptocurrency that survives on these markets and one that does not. And it's because our markets run 24/7. I mean, you don't have time to be down. As soon as you're down, whoever else was helping to fill your use case is now eating your lunch. And I caught this off of Peter Schiff. I swear, some people are out there that know what they're talking about, and then there are others that do not. And even when looking at things like the mining costs for Bitcoin, I saw something on there about energy being consumed in mining, and I'm just like, it's supposed to be expensive. That's why we mine. That's why we don't have just a centralized hub with all the transactions being processed by it, because it's supposed to be hard. If it weren't hard, it would probably be a lot easier to game and a lot easier to cheat than it is. But back to, again, the performance of coins. This is a metric by which we judge which coins we want to invest in. You know, when you're looking at Bitcoin and you're saying, well, you know, they're achieving everything they're supposed to be achieving, but look at the differential between how much energy they have to expend to keep from being compromised and how much of it is actually being utilized to process the transactions in the block. And when you're able to look at that and you're able to see that you can change one or two things in the way that the mining operates that will make it more efficient, will up the efficiency curve, that's where you need to be operating in. You know, it's like somebody was bitching about the centralization of mining. You know what? It's a temporary aberration. It's temporary. Sure, it looks like they're centralizing now, but you know what you do? You make a quantum computer that is cheaper than an ASIC miner that'll do the same thing as an ASIC miner, and forget about it. We'll blow the current mining completely out of the water. They'll have to readjust the fucking difficulty, and the efficiency curve will just destroy China because they aren't planning for efficiency, because they've got so much excess electricity floating about. They can just rig shit up, jerry-rig everything everywhere, and just hook it up and get it to go. Well, we're coming into a time now, and we've been here before, and it's actually probably like the third or fourth time we've been here, where we're having to assess things like those warehouses of miners and all the electricity being dedicated to them, and how do we pare that down? You know, how do we make that smaller? And when we look at things like die size, that's actually being affected by mining right now. And I predicted this back in, like, I want to say it was like 2013, 2014, that mining would start driving the architecture design of GPUs, CPUs, processors, period. And I can tell you right now, it has bumped the development curve of processors. I would say it's bumped it along probably tenfold past where we should be if we were just developing along the CPU, GPU, development cycle, where they got it all planned out on six month intervals, where they're releasing the specs for the next processor in the first 6 months, and then in the second 6 months they're actually distributing the next processor, and in the next 6 months they're showing the specs for the next processor, and then the next 6 months they're selling. That whole thing has been turned on its head. We're down to 7 nanometer now. Okay, when I was in fabs processing, I mean, we were down to angstroms and shit, but we weren't down this tiny. We actually, I don't know if it's like 7 angstrom or if it's 7 nanometers. I think it's 7 nanometers for a different one, but point being that the spec has changed. And how that's going to affect mining, I believe, in the future is that we are going to get faster, more efficient, cooler running chips, cooler running miners. They're not as expensive to cool. They'll be smaller in size, but they will be more powerful, and they will hash the shit out of the ASICs. And it's going to be just like when the ASICs jumped in the pool, man. You're going to see this huge fucking spike in the difficulty. And what the fuck is that? And that's going to reshift this whole fucking map. And where I expect this to go past that is going to be when we start getting into things like Intel and IBM just saying, you know what, fuck this blockchain shit. We can't get anybody to use our services but the big ass banks, and we can only make so much money from them because there's only so many of them. There's like potentially 9 billion people on planet Earth. There are a lot more of them than there are bankers. So if we reshift the model to where we're trying to serve this mining interest down to smaller and smaller groups of people and smaller coins, we're going to be serving more and more customers. It's back when the gold rush was happening. The guys that were mining the gold, they didn't make shit. The guy that made the most money was the guy that was selling shovels and other supplies that they needed to mine gold. Well, the same thing is happening in mining. And as a matter of fact, because the market has been so hesitant to try and get into this whole thing, the gamers are constantly suffering from fucking GPU droughts. And it's gotten to the point now where Nvidia is actually making mining specific cards for no other reason than to be able to continue to serve their gaming customers. Can you believe this? I mean, if I were the CEO of a hardware manufacturer and I was looking at these facts, I'd be saying, okay, what's our current production capacity? How many fab units do we have out there right now? How many of them could we afford to retool, or how many of them do we have on plan to retool right now? The one that we haven't started yet but is on plan to be retooled, I want it retooled to produce ASIC chips now. I want you to start the project right now, redirect whatever capital you need to right now. I want you to retool the fucking thing and make some fucking die for mining chipsets. And it would be off to the fucking races. We would see another big ass boom in altcoin mining and Bitcoin mining. And I believe it would make the interest curve increase as well. Because one of the things that dissuades people from getting into mining to begin with is the hardware cost. Shit's expensive. And so at first you're always looking at this big ass hole in your fucking liquidity. And you're going, I gotta refill that before I'm profitable. So making that hole smaller to begin with, it's the potential hole smaller to begin with, I think that's the best way to go about it. Is, you know, that's why I was looking at things like block eruptors and shit like that. Somebody told me that was a waste of time, and just to, if I was going to get into mining again, just go straight multiple GPU rigs or something to that effect, or straight up miners, but not to really dink around with block eruptors. I don't know. I'd have to dig a little bit deeper into it than that. Anyway, let's go ahead and get into our first dance, because we have yet to play any music. Can you imagine that? We've just been rambling on for like 20 minutes. I didn't even do jujitsu today, but I did just get off the treadmill, so that certainly helps. Anyway, I haven't been playing anything off of For All Kings for like a long time. And so here it is. Breathing Lightning, Anthrax, here on Coin Metal. And that was Slayer with Dead Skin Mask. Temptation has lost all control. It's a good song. And even more so when you see it live. And I just wanted to take a moment and say that when I saw Slayer, they played damn near every single song I've ever wanted to see played live. It was really good stuff. Anywho, I've been following this kind of off and on, and as a matter of fact, if you go to my YouTube channel, you can find an episode that I did concerning Venezuela and their recent, how should I say this? They're basically leading the world into the 21st century of digital finance. And so here's this article. It's on Zero Hedge. This is written by Tyler Durden. On October 22nd, 2017 at 10:15 p.m., no indication of time zone. Going to assume from the moniker, yes, penis. Here it goes. Number of Bitcoin miners in Venezuela swells to 100,000. Venezuela's worsening economic collapse has created something of a social experiment. And you know what? I'm going to click on that. Might follow it up. Something of a social experiment in the use of a digital currency as a de facto currency, a phenomenon that's also playing out in troubled Zimbabwe. According to the National.ae, Bitcoin adoption in Zimbabwe is seemingly skyrocketing as the country's economic situation looks bleak. So much so that one Bitcoin is trading at nearly $10,000 on the Golix.io exchange, while the global average is at press time of $5,642. Jesus Christ, makes you want to move to Zimbabwe, doesn't it? Anyway, continuing. According to a local trader, Bitcoin isn't just being bought by individuals, but by businesses with bills to pay. The country adopted the US dollar back in 2009 as its fiat currency, as the Zimbabwean dollar had lost nearly all its value. At press time, local Bitcoin Zimbabwe has people buying Bitcoin at the global average, and some buying the cryptocurrency for cash well over $10,000 in the country's capital. Bitcoin, as every Bitcoiner would expect, is helping people in the country survive times of economic uncertainty, as Zimbabwe has been embroiled in a crisis for years. And as inflation in Venezuela has spiraled further out of control, by one estimate, it peaked above 2,400% in September. More Venezuelans are resorting to mining Bitcoin, Litecoin, and other digital currencies as a means of coping with the currency's out-of-control hyperinflation and surviving in a country where staples like food and medicine are scarce. Quote, Venezuela has one of the richest per capita was one of the richest per capita nations in the world, but now hyperinflation is very difficult thing to understand until you have to buy lunch. The country has not yet dollarized, but there's not enough dollars in Venezuela for that to have happened. Venezuela is becoming a cashless society. We're starting to see in Venezuela the first Bitcoinization of a sovereign state. However, while cryptocurrency mining isn't explicitly illegal, the country's Seven Intelligence Service has been known to raid establishments that show a suspicious spike in electricity usage. Electricity is heavily subsidized by the state in Venezuela, making mining a particularly lucrative prospect despite the risks. Bitcoin mining consultant Randy Brito estimates that about 100,000 Venezuelans are, quote, mining, although it is impossible to have an exact figure because many are protecting themselves by using servers in foreign countries, AFP reports, and we're definitely going to follow up on that. According to the local Bitcoins portal, transactions in Bitcoins amounted to 1.1 million in Venezuela in the last week of September. One local who spoke with AFP said her mining rig is producing 20 to 25 Litecoins per month. Quote, each Litecoin is worth $46. That's $920 a month, said Veronica. A fortune in a country where the minimum monthly salary is 135,543 bolivars, approximately $40 US, supplemented by a voucher of 189 bolivars, $56. AFP visited one office building in Caracas that has been converted into a clandestine mining operation, with more than 20 computers hard at work performing the cryptographic calculations necessary to unlock valuable blocks of digital currency. Caracas. Inside a locked room in an office building in Caracas, 20 humming computers use their data crunching power to mine bitcoins, an increasingly popular tool for the fight against Venezuela's hyperinflation. In warehouses, offices, and homes, miners are using modified computers to perform complex computations, essentially bookkeeping for digital transactions worldwide, for which they earn a commission in bitcoins. While practiced worldwide, Bitcoin mining is part of a growing underground effort in Venezuela to escape the worst effects of a crippling economic and political crisis and runaway inflation that the IMF says could reach 720% this year. Holy shit. Having no confidence in the bolivar and struggling to find dollars, many Venezuelans who are neither computer geeks nor financial wizards are relying on the Bitcoin, currently valued at around 6,050, or other virtual currencies. As international sanctions have left Venezuela starved for foreign currency, cryptocurrencies have provided one crucial means for the regular people of Venezuela, who arguably have been hit hardest by the sanctions despite marching in the streets and calling for the overthrow of the regime of President Nicolas Maduro to avoid the consequences of the administration's economic mismanagement. Now the question is, will Venezuelans abandon the worthless bolivar in favor of relying solely on digital currencies? Forgot a question mark there, Tyler. As we noted previously, one trader, John Villar, Caracas-based software developer, most eloquently stated, Bitcoin is a way of rebelling against the system. While the currency remained a niche form of payment in the country, many users purchased food and goods online through online marketplaces such as Amazon.com, albeit indirectly through gift cards purchased with the cryptocurrency. Let me get a little less volume on here. There we go. Bitcoin's popularity in Venezuela continued to grow. It became the country's leading parallel currency. Some vendors even begun accepting Bitcoin exclusively. A popular online travel agency, Destinia, cited that due to the bolivar's instability and the trouble many Venezuelans experience when attempting to leave the country, quote, given priority to Bitcoin as a payment method could be of help. While Destina admitted that Venezuela is not a primary focal point for their company, they chose to prioritize Bitcoin payments in the Venezuelan market to facilitate the travel needs of the people in light of the persisting economic downturn. With infrastructure in place, trading and mining becoming more popular, and the crisis escalating, Maduro's government began to take notice. Maduro's war on Bitcoin. The Venezuelan government began to crack down on the Bitcoin community, with police extorting citizens for, quote, misusing electricity or undermining the country's economy. These grievances intensified over time, however, and the attack on miners became more apparent. In the largest raid, 2 miners were caught with 11,000 mining computers and were charged with cybercrime, electricity theft, exchange fraud, and even funding terrorism. In February of 2017, following the incident, Sir Bitcoin, Venezuela's most popular exchange, went offline. The company encouraged users to withdraw their money immediately, as Banesco, the company's banking partner, was set to revoke the account associated with the exchange. Rodrigo Souza, the founder and CEO of Sir Bitcoin, noted that when it was found that there were 11,000 mining computers consuming the energy to power the whole town at a time when there were severe electricity shortages, it triggered a reaction. Souza went on to say that the company was not contacted by the government, but Banesco revoked their account as it did not want to be associated with such an operation. Sir Bitcoin resumed operations 2 weeks following. We suspect it will not be long before Maduro makes further, tougher action against this, quote, subversive behavior. Nope. Yeah, I don't think that Maduro is going to clamp down on anything. I think he's going to tacitly watch this shit, because it's already the crackdown that he did. It's already encouraging rampant corruption amongst his cops. I read an article not too long ago about cops getting busted for mining with mining gear that they stole from miners. So it's like, what the fuck are you trying to tell us here? You know? It's like they ganked the miners from somebody who was mining legitimately, probably even paying taxes on their mining profits. But no. We got to get down on that shit. We got to get up everybody's ass. You know, they're not paying down to the Satoshi or some shit like that. You know, this is one of those cases where I see a country going into Verge. I mean, because it's a small coin, it's fast, it doesn't require all the fucking ASIC mining and all that shit, and besides, it starts with a V. So, assuming Venezuela starts with the V for the Venezuelans, I would think it'd be a perfect match. just my little plug there for my coin. But yeah, I don't think Maduro is going to be cracking down on anything. You know, just looking at where Bitcoin is going and the fact that it's actually allowing for financial activity to happen within his economy at all, I think he's going to be like, no, I'm not going to touch it. Just you know, quit fucking with these people. You know? I mean, again, it's almost like the war on drugs, where, you know, you got the CIA and the DEA importing drugs into the country and then busting low-level people. Well, I kind of see this as the same thing within Venezuela, but I think we are going to see the full play out there. And it goes further. Where it goes further is this, that if Maduro does any crackdowns, they're already migrating over to Ethereum because it doesn't require as much mining as much mining power as Bitcoin. They did that months ago, where they were hammering down on mining farms, and so everybody just said, okay, well, I can't look at a mining farm, you know, and, you know, tell the cop, no, that's my desktop. But I can take a desktop, soup it up quite a bit, put a few video cards in there, and mine Ethereum through it, and tell them, no, man, that's just my desktop. See the difference there? So, again, I don't think we're going to see any kind of crackdown in Venezuela. I think if anything, we might see something where somebody does create something similar to Bitcoin or Litecoin, where it is a proof of work coin, there is mining involved, but it's maybe a lower power, you know, like one of these supposedly ASIC resistant coins, but just not circulated outside of Venezuela, just circulated within Venezuela. I don't know. I think Verge already kind of fits the bill there. Of course, they could be transacting in Dogecoin. I mean, it would certainly be more stable than their current currency. So, anyway, let's go ahead and throw down into some music. It's been a while. And we played some Prong. We haven't played any Sixth. We have not played any Sixth. That's just a shame. We need to. And so, we got 2 albums from them. And I think I played that last time. No, not that one. Which one? I mean, because they do make a lot of really good music. I don't know why they had kind of a brief breakup for a moment, and then they came back together and made Future in Whose Eyes. And so let's go ahead and throw something in from that. And I always have trouble with this album because it's got three spots where it has spoken word, and I can never figure out which songs they are because I'm listening to it while I'm on the treadmill. Anyway, we'll check out The Aura here on Coin Metal. And that was Sixth with Ride the Illusion. And I was just talking to somebody in the Telegram here, JXL, and he's getting the impression that there is such a thing that that there is something other than a noob in this game, and there just isn't, man. I mean, we're literally reformatting the world economy right now. I mean, we were just talking about that in Venezuela, where by force of market forces alone, they're just saying, hey, man, there's got to be a way out. Oh, what? What's this Bitcoin thing? What? We can spend that all over the place? What? We can find people that'll take it on fucking Amazon? Let's do it. And so, it's like, and we're going to talk about that in this next article here, that, a lot of people just discount the regular impacts that Bitcoin was actually intended to have within the monetary markets. They just like look at it as a I don't know how to put it, like just a speculative trading vehicle. And a lot of people use it that way. A lot of people use cryptocurrencies that way. But it's only because they haven't encountered the use case. Okay, where the rubber hits the road, that's where the shit becomes pertinent. It becomes, suddenly you understand exactly what the use is. It's like Peter Schiff always talks shit about Bitcoin. And he keeps talking about it going to zero. And it indicates to me that he lacks a fundamental understanding of Bitcoin. That, unlike the Federal Reserve note, it's not a fiat currency. I mean, a lot of people call it that, but it's really not. I mean, a fiat currency is an IOU printed by a private bank. Bitcoin is not a fiat currency in that it requires you to expend electricity and dedicate hardware and dedicate hashing power to processing the transactions. Okay, if you don't do that, you don't get Bitcoin. It's a receipt for work already performed. It's not a fiat currency in that it's not printed up out of fucking nothing for no reason. And it's not a fiat currency in that it has an actual cap on the number that will be produced, and a set schedule as far as disbursement goes, and set conditions that must be hit before the disbursement is made. So, I mean, it's a continuous chain in that. It's like, short of the internet going out, short of a government figuring out how to completely disrupt the Bitcoin network, short of any of that shit, there is not going to be a point when Bitcoin just stops and is worth zero. And as a matter of fact, if they stopped mining them for a short period of time, at least, they would probably go up in value because now they're an even more limited commodity. I don't understand why he doesn't get that shit. Oh, and that's where I got that dilution thing was Peter Schiff. He keeps talking about the creation of new coins, and or he's talked about this a couple times. I don't think he holds it up as much anymore, but he talks about dilution. It's like, it doesn't matter how many cryptocurrencies are created, there will only ever be 21 million quote-unquote Bitcoin. Now, I'm sure there will be some sort of effort in change that, but, you know, I'm not entirely certain how that would play out. But I saw this article here, and I thought this one was really interesting here. Financial theorist William Bernstein, Bitcoin is not a bubble, but remains suspicious. This is by Rebecca Campbell. It was done on, I guess it's today. Yeah, October 25th, 2017. No indication of time or time zone. Yeah. Anyway, let's continue on. Financial theorist and neurologist William Bernstein doesn't believe that Bitcoin fits the classic idea of a bubble. However, he claims he won't be wasting his time on it. The former American neurologist turned to writing about investing during the 1990s. A few of his popular bestsellers include The Intelligent Asset Allocator, The 4 Pillars of Investing, Lessons for Building a Winning Portfolio, and Rational Expectations, Asset Allocation for Investing Adults. Yet, while he doesn't think the digital currency shows textbook signs of a bubble, he remains suspicious of it. According to him, it doesn't fit the 4 points of a bubble, reports CNBC. And God damn it. Pardon me. These are, number 1, it hasn't become the main topic of social gatherings. That's not true. Number 2, people aren't leaving their jobs to speculate on Bitcoin. Dude, I haven't worked a job in over a year. 3, skeptics of the digital currency aren't met with anger. Ask Peter Schiff how much anger he gets, dude. He claims that the only sign of a potential bubble is the fact that there have been some extreme price predictions. In an interview with CNBC, Bernstein said, one of the 4 key areas of investment knowledge, theory, history, psychology, and investment industry practices. The lack of historical knowledge is the one that causes the most damage. According to him, Bitcoin has no intrinsic value, adding that it's a very bad sign to see that its price tag keeps rising. As a result, he stated, Bitcoin is not something I want to waste my time on. Unless you are an expert on blockchain technology and Bitcoin, stay away. Don't invest in things you don't understand. His comments join a growing list of critics against the digital currency. Most famous of them all is Jamie Dimon, JP Morgan Chase CEO, who said last month that Bitcoin was a fraud and that it was worth nothing. The cryptocurrency market has experienced a surge in price recently. At its highest, Bitcoin soared past the $6,000 mark, making its value worth more than Goldman Sachs, and helping to push the combined market value of around $170 billion. Yeah. Well, I think you're full of shit, dude. And it's not your fault. I don't know that you've ever experienced a global fiat collapse before, but I'm sorry that's what's going on, dude. You need to listen to my show a little more. Maybe you would understand that. No, I'm just kidding. It's really funny to see this kind of analysis of what's going on. Because, again, I don't think these people have experienced a serious fiat collapse in their lifetimes. And so, identifying exactly what's going on with the shift of confidence and the shift of monetary value around, it's not just something you can point at and say, oh yeah, we're going through a fiat collapse right now. That's like the last thing you want to say, because if you do say that, all of a sudden you got a fucking bank run, global fucking bank run going on with your currency, and then it just precipitates the fucking problem. Or makes it worse. Exacerbates it, rather. And so it's one of those things that you're not seeing these people call it, but I mean, these 3 points right here, it hasn't become the main topic of social gatherings. That happened in 2012, 2011? 2012, around there were already social gatherings. There were already meetup groups for Bitcoin. So that number one, that's gone. We're in 2017. That's 5 years after the social gatherings started. And main topic of social gatherings, dude. There's legacy financiers, banks, all of these fuckers, big ass brokerage houses, they're throwing events describing where they showcase their fucking cryptocurrency / blockchain / ICO projects. So number one on the bullet points here, completely fucking blown. Completely fucking blown. Number two, people aren't leaving their jobs to speculate in Bitcoin. That mark, again, that ended as soon as there was a dollar value of Bitcoin. People started leaving their jobs specifically to speculate in Bitcoin. And if you doubt it, go to fucking YouTube and type in trading Bitcoin or trading cryptocurrencies in the little search bar and hit enter. You will find thousands of videos dedicated specifically to trading Bitcoin. And if you look back far enough, you will find out that they've been posting them since 2012, 2013, easily. So number two is completely fucking bullshit. Number three, skeptics of the digital currency aren't met with anger. Again, talk to Peter Schiff. He will rattle you off a fucking litany of hate that he's been receiving because he's been at least outwardly, he's been a contrarian with regard to cryptocurrencies. But I suspect, being the savvy trader and savvy individual that he is, that he's invested up to his asshole in Bitcoin. When he does these trades for his people through gold money, I'm sure that he has the thing set up to where when they sell they want to buy gold with Bitcoin, he gets the fucking Bitcoin. They get their gold, but he gets the Bitcoin. That it's not sold out to the open market. That he gets the Bitcoin. So, yeah, and he talks about how people, when they accept cryptocurrencies, they immediately roll them over into fiat. That's not true at all. And as a matter of fact, I wanted to talk just about number two again. People aren't leaving their jobs to speculate in Bitcoin. I believe I read last week or something, or the week before that, where some guy sold his fucking house. Okay, he and the wife and the kids moved into their van. He sold the house. He bought Bitcoin. Now, I believe it was before it shot up to $6,000. If he was smart, he sold at the peak, and he's adjusting his position now in getting further into it. But we'll see. But the point being that this guy didn't just leave his job. He sold his fucking house. And then he took the money and he used it as investment capital to buy Bitcoin. How much deeper, how much further off are you on that mark, man? I mean, come on now. I mean, how much further can you be off of that mark? So yeah, his bullet points, let's see if there's anything more to this. I'm looking over the CNBC article, just awfully suspicious on the criteria alone. The fact is very bad sign. Neurologist. No. Bitcoin, blah, blah, blah. No, nothing new. Nothing really new. But yeah, so I would say right off the bat, Mr. Bernstein probably doesn't understand what's really going on. I mean, I could be wrong. I could be completely wrong, but I think he's wrong on this point, in that the points that he's using as indicators of a mania, specifically with regard to cryptocurrencies, are not really applicable. You know, that his marks have already been hit for it to be a quote-unquote mania. And the fact of the matter is that we're seeing even more investment in this space by institutional investors. And I mean, they're creating new ways to get into this space. You know, they're creating their own derivatives and whatnot and trading them in-house. So I mean, this shit is going on, man. I mean, and it's only increasing, and I don't think it's going to slow down. I mean, I really think this is another one of those cases where we have somebody who is only used to looking at fiat-based markets. They do not understand the underlying dynamics of cryptocurrencies and the differences between them and fiat monetary units or nationally issued monetary units. And because he doesn't have the perspective of being in an economy based on a currency that is being debased intentionally, he doesn't have the context for seeing what's going on around him. I'd really like to look this guy up on Twitter and send him my episode saying, you know, is it a crypto bubble or fiat inflation? Because again, I've gone over this so many times on this show. I feel like I'm like a fucking mina bird sometimes. That when you're looking at the price of Bitcoin, you're actually looking at an exchange rate between two competing currencies with their own dynamics underneath them. So, you know, to assume that the demand curve that you're seeing for Bitcoin, or at least the price curve that you're seeing for Bitcoin, is reflective solely of the demand or market sentiment is bullshit. It is the only market where the market can actually display its value versus a collapsing fiat currency like the US dollar. It's the only one. You know, every other market out there is grossly distorted in a million ways. Like, you know, we were talking about before, I think it was last week sometime, about how gold derivatives, the reason that they even exist is because of lapses in supply and seasonal mining. You know, you have to be able to transact, you have to be able to trade your commodity during those times when you don't have an available liquid supply. And that is exactly what the CDs are and whatnot. But the problem is, sorry about that. The problem is that the gold gets counted on too many ledgers at once because you can't just transfer it. There's always lags in between what the state of the ownership is on everybody's books and what the real state is of the possession. You know, so like if I sell 32 tons of gold to the Russian government, okay, it's going to take a while to move 32 tons of gold from wherever I have it to them. And even if I don't physically move it, I have to move it around on the books. I have to, every ledger that counts that volume of gold, where it says owner, I got to put in Russia. And there's always a lag on the market with that. Well, this is why I say that you cannot connect cryptocurrencies and hard commodities such as gold and silver because of these lapses. Okay, and again, there are lapses in mining of new gold. They have gold futures out there and whatnot, but they don't necessarily match with what the market actually produces. If they produce less gold than the market expects, then the gold that they do produce is worth more. If they produce more than what the market expects, then it's worth less. But because there's that interval in between, you can trade it like it's worth more until it's worth less. And then you're like, oh, fuck. Wrecked. So now, and trying to attach that to a cryptocurrency and using the valuating medium as for the valuating medium, the Federal Reserve note or another fiat currency, you've added in another factor that is just a whole bundle of fucking question marks. You don't know how many there are. You don't know how many are being created right now. You don't know how many will be created. And now that they took the cap off of them, basically the cap off of the U.S. government's budget, there's no telling how many will be created. But the one place we will see the true value actually communicated back to the market is on cryptocurrency markets. Yeah, that's right. Because the electricity market for us resets on a 10-minute interval. Not a fucking a month interval or a 60-day or a 90-day interval. 10-minute. And so with that, I think that Mr. Bernstein is a little bit off. We've already experienced all the mania curves that he's talking about, and yet we still really aren't into the depth and breadth of where cryptocurrencies are going to take the world economy. I mean, we already talked about the emergency situations in Venezuela. What about when those translate out to bigger economies, like the U.S., like Russia? I mean, then we're talking about something a lot more dramatic. A lot more. But yeah, Mr. Bernstein, you have not seen shit yet. And, we're still under $200 billion for global market cap for cryptocurrencies. Do you know how many billions of dollars, and just US dollars, are trillions, possibly quadrillions worth of monetary value being held in US dollars all over the planet right now? Those are all losing value against Bitcoin. So the banks have to do something with it. They're holding on to it right now and just getting money off of loan interest and shit like that. But for every millisecond they're holding on to it while Bitcoin is going up, they are losing money. And so the monetary value has to go somewhere. It's not going to continue to stay in US dollars while Bitcoin is shooting up through the roof in contrast to it. We're already seeing cases here out in Zimbabwe where they're trading it for over $10,000. We reported the other day here on the show where they were trading it at $8,880. So that's up another $1,000 or so. I mean, come on, people. It's not hard to see what's going on, and to assume that the U.S. government or the Euro or any national government is going to be immune from this effect is just silliness. I mean, really, they couldn't have planned it any better. They're holding quadrillions of dollars off on the sides. Here's this new fucking unit that can be spent all over the planet. So I would expect Bitcoin to continue to go up. But that's just a function of fiat inflation. It's not because we're that much more... sorry about that. It's not because we're that much more wonderful than we were a moment ago, you know? Or a year ago or 6 months ago. I mean... Anyway, let's go ahead and throw it back down into some music. And as far as what to pick, it turns out to be a mystery sometimes exactly what to pick, where to go next on this show, but I like it that way. I don't even have a playlist. You know, we haven't played any Megadeth in a long time. I think we should go like deep, like the skull beneath the skin, old school Megadeth here on Coin Metal. And that was Pantera with Cemetery Gates. And so, as we're coming into our last hour of Coin Metal, got a couple articles here. And I didn't want to quite get into this one quite yet because I came into another one here. I think this is a complete miscall. And this is on Coindesk.com. AMD CEO sees, quote, leveling off in cryptocurrency mining demand. And this is by Aaron Stanley, clearly penis. October 25th, 2017 at 7:10 UTC was the author date of this. Graphics card maker AMD reported a major sales jump in the third quarter of 2017 amid significant demand from the world's cryptocurrency miners. On its Tuesday afternoon earnings call, the company reported $819 million in revenues from its computing and graphics division for the third quarter of 2017, a whopping 74% increase over the prior year's quarter. While the company's graphics processing units, GPUs, have been traditionally used by video gamers, cryptocurrency enthusiasts are quickly snatching up the tools for mining Ethereum and other coins. In a possible nod to that circumstance, AMD said the revenue was, quote, primarily driven by strong sales of its Radeon GPUs and Ryzen desktop processors, both of which are employed for crypto mining. In particular, AMD noted that sales of the Vega 56 and Vega 64 GPUs ramped up significantly during the quarter. These are among the most highly sought-after devices in the cryptocurrency market because of their significant processing power compared to other products. With stagnant growth in its other core business segments, these surging GPU sales fueled a 26% year-over-year increase to a total revenue of $1.6 billion, making it the company's highest grossing quarter since 2011. 2011! That's 6 years, buddy boy! But while the numbers are eye-popping, the company's shareholders weren't impressed with the Q3 results. I don't know why. AMD shares ultimately dropped 12% from $14.25 at closing on Tuesday to as low as $12.43 in after-hours trading. This coincides with the investment community's highly cautionary stance towards AMD's exposure to the volatile and potentially fleeting cryptocurrency market. And it has this potentially fleeting linked as a hyperlink, so we're definitely going to follow that up. Plus, AMD forecast a decrease in cryptocurrency-related revenues for the fourth quarter, expecting its fourth quarter revenues to decrease by 15% from the third quarter, give or take 3%. As CEO Lisa Su said on the earning call, quote, "In terms of the headwinds, we're also predicting that there will be some leveling off of the cryptocurrency demand." Overall, the message was mixed. While she issued bearish statements about the future of cryptocurrency mining as it relates to AMD's earnings, she also seemingly left the door open for other opportunities, although those seemed less clear. Quote, "There's also a commercial blockchain component that we believe is interesting and likely to continue in the medium term." Yeah, I see the picture clearly. Miss Sue, you're a fucking idiot. I'm telling you that right now. Basically what she's saying with this is that they foresee that the consumer end, me and you, we're gonna die off in our demand, while their quote-unquote blockchain projects, people like IBM and Intel and whatnot, are going to be seeing more of their mining hardware. And I can tell you right now, that's not the way it's going to go. You know, I mean, I understand what's going on, and I can see very, very clearly, and I hope enough of you are actually listening to this, that what's going on is they are planning for mining to be taken away from the public. That's what they're planning for. Do you plan to let them take mining away from you? Because that's what they're planning. If you're working on a cryptocurrency miner right now, they are planning on taking you out. That's just the case. But I think we are going to be coming to another headwinds, Miss Sue, or Mrs. Sue, or whatever the fuck the case may be. Another headwind is brewing, and one that you've been facing this entire fucking time and flipping off. You know, I know that this is all linked to SegWit. It's all linked to SegWit. All of it. The legislation we've been reading on this show, talking about money transmitters and custodians and all that shit. They're preparing to kick the public out of mining. They're going to kick you out of processing transactions with the Lightning networks, or at least they plan to. So, if you're implementing segregated witness into your technology, they're planning on kicking you out of your technology, like it or not. That's what's going on. And this thing here with AMD, they're basically saying that they're going to be supporting the blockchain projects and plan to be making processors for them. And this is the problem that I see there, is they're planning that they're going to be serving a tiny community of miners, i.e. the legacy financiers. They plan to be servicing them, you know, making new mining hardware for them and whatnot, while not making new mining hardware for you. That's why they're predicting that there will be some sort of leveling off. See, I don't think there's actually going to be any leveling off in actual demand. I think what's going to happen is they intend to legislate the demand away. Yeah. And I know it might be some of you having difficulty coming to that reality, but that's been the case this whole time. And once they get a majority of transactions in the Bitcoin blockchain as SegWit, that'll be that. That's the plan. Now, whether or not you allow them to do that, that's an entirely different story. And one of the things I've been thinking about doing is, if I ever can get ahead of my finance curve here, which I think I may soon, but I'm not sure. If I ever do, I plan to be setting up a full node and and supporting transactions from Bitcoin variants prior to SegWit. Check that out. See, I think that's what's going on right now in Bitcoin, is that the vast majority of the nodes out there aren't propagating regular Bitcoin transactions. They're only propagating SegWit transactions. And so whatever regular legacy transactions are happening out there, they're not being included in blocks because they're not being propagated across the network fast enough. And they're just getting crowded out by more and more SegWit transactions. Now, I've stated this before, and I don't know that enough of you are really paying attention to this shit. But I'm pretty sure that this is exactly how they did it on Litecoin, on Gridcoin, and a few other coins. And after a while, they just started calling all of the traditional miners spam. They're like, oh, these guys are just spamming the network. They're spamming the network. We're experiencing a lot of network spam right now. It's not what's going on. They're still struggling for the longest chain is what's going on. But of course they don't advertise it as that. They don't want you to know what's really going on. They don't want you to know that they've taken over the node section of the network and that they're basically running a coup. And they're doing that on Bitcoin. So if you want to fight that kind of thing, you fight it like the way that they brought us to where we are now, where all of you out there get a Raspberry Pi and as stupid as 1 terabyte hard drive and set up a full node and support a variant of Bitcoin that doesn't include SegWit. That's the way you get rid of it, because then all of the legacy transactions that are all of the regular traditional Bitcoin transactions that are going across the network will get propagated on your node, and then you'll crowd SegWit transactions back out of the block. See how fun that is? Just takes a few thousand of you to do it. That's all it takes. Anyway, I want to shift gears a little bit here. And this is a follow-up to that article here, and I want to dive into this one. This was actually written on September 1st. Now, this article was linked to the last one that we read, and now understand that there have been various changes in the cryptocurrency market since this article was authored, and this is September 1st. So we're just stating this to give us a little perspective here, how much history has actually changed. And this is on Coindesk.com, again, written September 1st, 2017 by Mr. Aaron Stanley. Inevitable bust. GPU makers see crypto mining as a short-term sales boost. Graphics card manufacturers are riding high on renewed interest in cryptocurrencies. While historically the slowest time of the year for their businesses, Q2 proved to be lucrative for NVIDIA and Advanced Micro Devices, as interest in Ethereum and other cryptocurrencies has exhausted graphics processing unit inventories. That's because, while not designed for the technology, GPUs from product lines such as NVIDIA's GeForce and AMD's Radeon can be used to mine Ethereum and other popular public blockchains, including Litecoin, NEM, Dash, Monero, and Neo, and XVG. This means that by running special software, these hardware components allow users to compete for lucrative rewards. On Ethereum blockchain, each block is now worth nearly $2,000. As the value of these digital assets has surged in the second and third quarters, GPU companies have seen booming demand. Nvidia posted a record $2.23 billion in revenues for the quarter ending in June 30th, a 56% increase over the prior year quarter, and to a $260 million above the company's forecasts. Further, AMD, whose graphics cards sold out within minutes, grew revenues 19% to $1.2 billion, catalyzed by a 51% surge in sales from its computing and graphics division. Industry-wide shipments of add-in boards, which house the external graphics cards used by cryptocurrency miners, were up 31% from the first quarter to the second, according to John Petty Research, a market research firm who tracks GPU sales. By contrast, over the last decade, first to second quarter shipments declined by an average of 10% and plummeted by 22% in 2016. To further illustrate the explosive demand for crypto mining, John Petty, president of the research firm, emphasized that sales were almost entirely driven by high-end GPUs, which typically sell for between $500 and $1,000, which are the most powerful and preferred by miners. Petty explained, "At normal distribution, the high end is 10% of units. Now it's more like 90%. If you look at the high-end sales, if you took the high-end sales out of the equation, you would have seen a second quarter drop that would be normal seasonality. Reasons for optimism. A hallmark trait of any asset bubble is the proclamation that, quote, this time is different, even though the end result is usually the same, a price collapse. Yet, there is a simple reason to believe that this mining boom might actually be different, as the surge in demand in 2017 is much stronger and much more diversified than what was observed in 2013. Ambrish Srivastava, an equities analyst who covers both companies. My apologies on that, by the way. An equities analyst who covers both companies for BMO Capital Markets, a division of the Bank of Montreal, went so far as to make this assertion in a recent note to clients, writing, quote, "There's merit to that argument. There are many more currencies. There's a lot more momentum behind mining." Not only is the popularity of Ethereum and tokens issued on its blockchain continuing to grow, there are no alternatives that could render GPUs unnecessary on the network, which now holds $36 billion in value. Let me check something here. Oh no, okay, there we go. I was just checking and verifying something here. Oh, where it is. In short, investments in GPUs for mining could have staying power. While Bitcoin eventually saw GPU mining replaced by more powerful ASIC designs, Ethereum's mining algorithm is built to resist this outcome. That algorithm is written in such a way that it will only run on a GPU. Alternative silicon solutions aren't forthcoming, said Petty. As long as people can make money doing Ethereum mining, they will continue to invest in GPUs. Manufacturers take. Yet, a key question for both of these companies, and more broadly the industry, is how long the crypto boom and the mining demand it fuels will continue. During Nvidia's second quarter earnings call, the company's CEO, Jensen Huang, was optimistic that the roughly $150 million in revenue made during the quarter from GPU sales for crypto mining would continue, asserting cryptocurrencies and blockchain are, quote, here to stay. He continued, quote, this is a market that is not likely to go away anytime soon, and the only thing that we can probably expect is that there will be more currencies to come. It will come in a whole lot of different nations. It will emerge from time to time, and the GPU is really quite great for it. While these comments are quite bullish, Colette Kress, NVIDIA's chief financial officer, attempted to walk them back in a follow-up call with analysts, according to Kevin Cassidy, an equities analyst with Stifel Nicolaus. When I asked the CFO for more details on that, she said, quote, well, I think he overplayed that. She's a little more cautious on the market, Cassidy told CoinDesk. And this carelessness echoes AMD CEO Lisa Su, who took a more tempered approach in her company's second quarter earnings call. Quote, it's important to say we didn't have cryptocurrency in our forecast, and we're not looking at it as a long-term growth driver, she said, adding, quote, we want to be cognizant of the fact that some of the graphics demand that we see might be temporal. We're not counting on that staying through the full year. Frankly, I think we'll see what happens with this whole mining stuff. Fuck you. Unlike NVIDIA, AMD did not estimate how much revenue it derived from mining activity, but Mitch Steves, an equities analyst with RBC Capital Markets, surmises the figure is between $220 million and $250 million. Because AMD is much smaller than NVIDIA but recognized as the market share leader for crypto mining products, the company has little to gain by promoting the extent to which it benefits from the activity, since Steves estimates it would be material to their top line. Quote, so that's why they are trying to message it differently, Steves continues. Quote, if AMD comes off as really aggressive and let's say 10% of their top line is going to cryptocurrencies, investors are going to be wary to pay for that revenue because it could go away very quickly. Possible headwinds. And there are looming headwinds that will likely put pressure on mining demand and, by extension, GPU sales. For instance, upcoming changes to Ethereum's infrastructure are likely to eliminate altogether the need for mining in its ecosystem. Quote, while we have seen a surge in demand from cryptocurrency mining in the second quarter for GPU cards, we are not at all bullish on the sustainability of this demand, Srivarsvara wrote. Several other analysts doubled down on that skepticism, wondering if a sharp slowdown might prompt a repeat of the crypto bust of 2013 and 2014, when a decline in Bitcoin prices prompted miners to jump ship and begin selling off their GPUs, primarily AMD devices, on the secondary market. Srivarsvara told CoinDesk, quote, I talked to miners who said the moment the price collapsed and the economics went against mining, I immediately sold all my stuff on eBay at whatever price I could get. The fallout from the bust subsequently throttled AMD's sales for several ensuing quarters. Quote, that caused AMD to have inventory problems, explained Cassidy. No one was buying new cards because you could buy used cards for half the price. And that's the scenario many people are cautious of. Yeah, I can see that as a cautionary note, something to keep in mind, I'm sure, in their supply chain, is they don't want to worry about another big-ass glut. But here's the problem. because they won't up inventory, their fucking cards are going for $1,000. And right now they're working the shit out of our our investment profiles by making these fucking cards unnecessarily expensive by restraining their fucking availability out on the market. And this is kicking the gamers in the dick. You know, they're looking at their gaming boxes and they're like, well, fuck, I want to upgrade my machine, but I can't afford to SLI two $1,000 fucking cards. I just can't do it. You know, I'm not making enough money from what I'm doing in gaming to continue that. But I don't know. I think that what really needs to happen is AMD or Nvidia really needs to get serious about their mining. They need to dedicate an entire department to nothing but mining, and they need to up their production capacity so that they can lower their individual unit price. And really that's what's going to get them through on this. I mean, they're both companies, AMD and Nvidia, are making money hand over fist on mining. I mean, you're listening to quarterly numbers. They're talking about billions of dollars a year in revenues from you mining. I mean, jeez. What bigger fucking market clue do you need? I mean, this is not going to go away. You know, people keep wanting to call what's going on in cryptocurrencies a bubble. I saw somebody else, they put this fucking perfectly, okay? Currently, the market cap of cryptocurrencies is under $200 billion, right? There are quadrillions of dollars worth of monetary value being held by banks. And that has no choice but to come into cryptocurrencies at some point or another. Otherwise, they're just going to lose the fucking money. So, you know, with that in mind, it's kind of obvious that you're looking at nothing. You're looking at the very, very beginning of this shit. Still, we're in year, 8, 9 now? We're year 8, more or less. And look at where we are with it. This isn't going to slow down. This isn't going to stop. And this whole thing that they're counting on with Ethereum going to proof of stake, I think that's already happened. But they're still out there mining it, so I don't know. I think they had some sort of hard fork where they're preparing for that or something. I'm not entirely sure how that went down. But anyway, let's go ahead and throw back down into some music. I'm kind of winding down myself. And get a couple songs in here and then maybe one more article. And as far as what to throw down, I haven't been playing any 9 Inch Nails today. I've been playing a lot of other stuff, but no Nin. What the fuck? Where is it? A, B, C, D, F, G, H, G, K, L, M, N, P, and O. There we go. Some fucking 9 Inch Nails. And as far as what to play, let's go with Closer. You're on Coin Metal. And that was Suicidal Tendencies with Trip at the Brain. And it is with that we're closing out this whole episode. As for Friday, as I indicated before, supposedly we're going to be having Vinny Lingham on here. Whether or not that actually materializes, I'm not entirely certain, but so far, that appears to be the case. And so, yeah, a lot of stuff to think about. You know, I think if you were thinking about getting into cryptocurrency mining, it'd be a good time to do it, especially considering the upflow we're going to be seeing in the altcoin action on the other side of the potential Bitcoin fork. We still have that looming in our future, and so it has yet to play out fully and show us exactly what it has to reveal to the cryptocurrency market. And we will find out. But anyway, we will be back again on Friday. And so until then, I want you all to trade safe. Do your homework. And definitely watch out for your bunghole, because nobody else is going to do it for you. We're going to go ahead and play Bounce as our final dance for the evening. Y'all have an excellent day.